Hello and welcome back to the Andersen podcast series, Everything Tax. And today here with me, my dear friend Miles Dean, who's partner in United Kingdom, Andersen. And today we're going to talk about a bit more about UK market, what's happening in UK in terms of tax, in terms of, foreign direct investments, and a bit about crypto. So Miles, thank you so much for sparing your time and being here with me today.
Thank you very much for having me. It's lovely to be here.
I continue to hear much about crypto, and there's a lot much talk about essentially across Europe about the crypto market. So how this crypto regime is there in United Kingdom? Is there some relaxation, some ease out there for people?
No, not at all. I don't specialize in crypto. I sort of dabble around the edges on certain projects where my kind of skills and expertise can be of use. But the big issue is that the FCA, the Financial Conduct Authority, is very slow in greenlighting new projects. So the result is that a lot of projects that would be based in the UK are having to be offshored because they can get regulated offshore. The other significant issue that we have is that the HMRC's view is that the situs of a crypto asset for tax purposes is where the beneficial owner belongs. Now, if you're a UK resident and domiciled individual like myself and you're taxed on a worldwide basis, the fact that you hold a crypto asset in a wallet, it's clearly taxable. But if you're a non-dom claiming the remittance basis of taxation, well, where is the situs of that asset if it's held in the ether somewhere? Well, the revenues say that it's a UK situs asset for tax purposes, and a lot of there's a huge number of non-doms. I'm fairly sure of this that aren't aware that they've got assets which are liable to tax, even though they're claiming the remittance basis of taxation. There's also, I think a generational issue here in that crypto is seen, I think, as being a sort of younger generation's thing. There's a much bigger take-up of crypto as a serious asset or investment than maybe people of my generation, or dare I say it, yours, Anurag. And I certainly see, I do quite a bit of remedial work where young guys have set up, a BVI company, for example, and put crypto assets into a BVI company, and they've been investing it and trading it, and they're UK domiciled and resident, or they're UK resident and non-domiciled, but they're doing that from the UK because their mates are doing it, or someone else, one of their mates in, let's say Spain, who's there under the Beckham law regime, or someone who's in Portugal under the NHR regime that was, a lot of, I don't want to say kids because it's disparaging, but a lot of the younger generation are doing things without taking advice and creating really significant tax issues for themselves. So there's a lot of work that I do in that regard as well, where trying to get people to filing position or try to undo transactions, or getting them to accept that what they've done won't fly, and to make a disclosure to the revenue, and that's going to continue for some time. Because I think we've seen, the way in which international tax authorities operate is by this mutual exchange of information, and I understand that HMRC has received some various data dumps from exchanges with details of individuals. So there's lots of nudge letters going out from the authorities to individuals who HMRC believe haven't filed correctly. So that trend will continue for sure.
And I think Gen Z's, they call it Gen Z people nowadays. So
that's what it is. Yeah, exactly. Yeah.
So Gen Z people, they want to do things in yesterday, and when they come out there, today's situation out there, they want to do things in a very, very rapid, fast manner without understanding what the implications and considerations are there. So I will urge, all these Gen Z, millennials, people out there, that they need to take a bit of, caution and advice in relation to when they're executing transactions. Now that brings me to an important point that, some of your colleagues, in UK, they have been very, very, deep-rooted experience along with policy making. I mean, some of the colleagues that I know that they've been working with HMRC for quite long time. So how this, the policy advisory, practice in the UK, and how we can leverage that particular experience out here in the Middle East, because we are growing, we are changing a lot much tax regime in the moment right now, because 6 years of taxes. Last year the corporate tax comes in picture, and who knows, in due course, next 5 years, 7 years time, maybe we essentially see the individual taxes as well. So
do you think so?
Probably that
Right.
could be a possibility out there, because the way things are happening around in the Middle East region, it's not something which will be very, very surprising if something like that can come in next decade or so.
Yeah. So your question was about So I've got two colleagues in the office who are sort of very senior ex HMRC officials. Shout out to Andrew Parks, who's my right hand man, and you'll no doubt have spoken to AP previously. He's a legend, and Dion Seymour, who sits in our crypto team and used to lead HMRC's crypto initiative. So shout out to Dion too. Look, having guys like that work with us in the office is absolutely vital. It gives a different dynamic, and it allows us as tax advisors to sense check, or get them to sense check what we're doing, to make sure that we're doing things as we should. We're not being overly aggressive. We're not, as a practice, aggressive. I think we've collectively, I don't think, ever been involved in any tax schemes or arrangements that would fall under our DOTAS regime. So we're naturally fairly circumspect. But to have Andrew and Dion there, who've both been involved in tax policy and negotiating double tax treaties and such like, is absolutely invaluable. So if your colleagues here in Dubai, the authorities need guidance or would like to reach out, then that would be fine.
And I definitely talked to Andrew in the past, and then we try to get into some of the projects together.
Yes,
and the kind of knowledge that he has is really, really incredible, and the deep thoughts, and then that really, it's a unique experience. Policy making is
it is, and also when you're trying to solve a problem for a client, getting that sort of revenue perspective, and how would the revenue view this transaction, or how would they view the advice that's being given, that's really invaluable, both to us and the client, of course.
Absolutely. Now, Miles, my last question to you is, we have now, as you know, that corporate tax is here. A lot of businesses from here to have presence in UK, and how your team in UK can help them out in terms of doing kind of impact assessments, doing kind of diligence exercises, or probably getting the impact of UAE corporate taxes into the businesses in UK. I mean, is there something that they need to really look into? They need to figure it out, and your team can help them out in relation to that.
Yeah, I mean, as you know, Anurag, we're a full service tax practice in the UK, and one of the we do a lot of tax DD work. When there's foreign direct investment, or there's a company in the US or from UAE looking to make an investment into the UK, obviously tax DD is central to that. And as regards the impact of other sort of European taxes, as you know, I lead the international tax team at Andersen, so I work very closely with all my colleagues across the world, and in particular Europe as well. So certainly where there's a transaction involving multiple jurisdictions, understanding what the impact is of local taxes in 2, 3, 4 or more of those jurisdictions, and understanding what tax breaks are available, what incentives, what reliefs, that's also kind of critical to an inbound transaction.
I think that'll be very helpful, because essentially these businesses really need to look into their existing structures, and probably the impact of UAE taxes on this, and certainly try to understand situation of the establishment kind of stuff, permanent establishment and employment risk kind of stuff.
Well, we see a lot of that. We do a lot of the work that I look at on a multi-jurisdictional basis is looking at how structures have changed. So you mentioned sort of privately held international businesses, which is really my target client base. You often see that these businesses, where there's either a sort of internal finance director, or you've got a the patriarch or the chairman who's had a very sort of significant impact in the growth of the business, you often find that there are companies incorporated here, there, and everywhere, a lot of which have no purpose anymore, and a lot of which have got maybe intercompany debts paid to them or received by them, that often have, as large companies do, have permanent establishment risk. You know, they've got individuals now, certainly post-COVID, where we touched upon this kind of the change in work-life balance. That PE risk is very real and very significant. I've got a US client that I found out last week that's got 30 employees in the UK. There's no UK subsidiary, there's no UK payroll.
Oh my God.
So there's a real compliance piece there to pick up and to make good. So that all these things, the PE risk, withholding tax issues, certainly transfer pricing and intercompany pricing of transactions, and making sure that the documentation of those is correct and robust. All these things we look at on a regular basis when doing tax DD or reviewing, doing an annual review of a corporate structure for one of our clients.
Superb. Thank you so much, Miles, for being here with me and sharing so much great insight on the UK market. And essentially, I look forward to the election and see, how
So do I.
the things are changing and getting the more robust momentum out there in UK for the rest of the world. So thank you so much for spending time.
Thank you very much for having me, Aaron. Thanks.
Thank you.